I think across the board on a net basis, it was definitely a beat. The guidance for the current quarter up a little bit from the anticipated range in terms of revenue, margins right on target. So it looks like largely in the zone of what the street was looking for with a slight positive tilt. But yeah, the average selling price, obviously the appetite for the latest models is probably good news if you're trying to handicap exactly how strong future upgrade cycles might be.
Just to repeat that number, $724 for the average selling price would suggest that more iPhones are getting sold on the expensive side.
Exactly.
The X, the 10, you know, getting at that $1,000
$30 above what Wall Street had anticipated in terms of the average selling price. So that's a pretty decent margin.
And Ed Lee, also seemingly high-end phones continue to be sold in China. And the commentary, I'd say, that Josh brought us exclusively there from Tim Cook, not too concerned about the trade fears. We'll hear more, but on the surface, not too bad. It could have been worse.
And it's an important signal, though, because, you know, China represents about a fifth of its sales, and it's still one of the faster-growing regions for them. I think the price is interesting. I think that the higher end of that tells us, you know, reinforces the idea Apple is not a commodity product, never has been, never will be. And, you know, folks in China like that. I think they like, you know, like any consumer anywhere, they want the best, the possible thing. And it's the fact that people want to pay more generally tells you just how much more value the device adds to people's lives, all the different apps that are on there. And I think that's a big part of the thesis for it.
I think it also sort of counters the very bearish argument that this is a saturated market where smartphone sales can't grow forever, Ed, which I think is part of your thesis of why you're bearish on the stock. Apple is answering that, saying we're selling higher priced, better new innovation phones. Oh, and by the way, we've still got the services business that's growing 31%.
Yeah, that's true. And from a revenue point of view and an EPS, of course, they beat and they look good. But the biggest problem you're facing with Apple, and it's been very evident now for several years, is that the high-end phone market is saturating. Their unit growth has dropped from double digits easily for the iPhone 6, around 30%, to 5. They dropped below 0 for the 6S. And you just posted numbers here that are only less than 1% growth. So it's fine if all you're looking for is to milk the high end, but sooner or later you're going to have to grow. Otherwise, your upgrade market's going to start to declining. And the Chinese aren't standing still. Huawei, Oppo, Vivo, Xiaomi are all releasing much higher end phones. They're not going to rival Apple anytime soon, but the trend is unmistakable. Their core market, which accounts for the vast majority of their profit, is stagnating. You saw this at Samsung last night, the high-end phones. And unless they do something to turn that around, I think it's going to get worse.
So Angelo, a lot of people get excited about the services revenue, certainly the long-term picture there. That came in at $9.55 billion. The forecast was $9.3 billion. Is that something to get excited about?
Well, the number pretty much, you know, X the one-time number came in at about 28%, which is exactly where we expected it to be. So, you know, is it something to get excited about? I think so. I think, you know, as long as we can continue to see growth of, you know, north of 20% here in the services business, year in, year out, I think that's a great thing for the share price in Apple, because I think the full potential of Apple here over the next couple of years is not going to be dictated on that iPhone business, which we continue to actually acknowledge that it's going to see no growth. It's really going to come from that services business and how much value they can extract out of that business, and it's looking great right now.
Ben, your reaction? I'm sure you're pleased with the numbers as a shareholder in Apple. And does this do anything to lift the tide of the rest of technology and especially FANG names, which is pretty downbeat right now off earnings?
Definitely. Well, not all FANG stocks are created equal. I mean, Apple, you have a very profitable business, a lot of cash, versus the hyper growth that you have with Netflix and Facebook. So although it's put in the same category, I don't really think that it should be. But we love these numbers. I mean, the average selling price, just huge beat there. And I think a lot of that is when people buy the iPhone 10, they're buying the higher memory, which that's an additional $150 that I think a lot of analysts didn't plug in there. But accessories and service is going to be the name of the game, because there's obviously not very much growth. But you do have AirPods everywhere here in California. You do have that $3, that $9, every single little monthly payment that all of a sudden comes from Apple. And then you have all the kids playing games on iPhones, and Apple is obviously making money there. So the name of the game is continue to make great phones, but then build out that services and accessory business. And let's not forget, Apple spent $12 billion in R&D over the past year. What have we seen from it? Nothing. But at the end of the day, we're going to see something there at some point, whether it's this quarter, whether it's next quarter, whether it's after that, we're not exactly sure, but we're expecting something there, and that should help the stock moving forward.
Mike, if we consider FANG to have a double A in the middle, the 5-stock version, should we be breaking Apple and Google away from that these days?
I don't know if it's quite just those two. It does seem as if there's a different set of concerns. Obviously, not advertising supported, so you could take, Apple aside in that sense. And the fact that there's such a hardware component right here. I mean, I get the focus on the services. It's still less than 20% of the business. A lot of that is kind of Apple Care and things like that. In other words, it's not purely Netflix where people affirmatively decide, forever, I'm going to spend $9 or $12 a month on this product. So I think it's getting in that zone of being able to be considered kind of this platform company, but I don't think the market's going to value it quite that way yet.
Well, it never has. I mean, it's still trading under 17 times.
It's about a 15 times
But I agree. The big value, the big potential value is Apple as a distributed network. I mean, they've got, there's a billion iPhones out there, basically. They keep adding more every quarter. They haven't quite exploited it in the best possible way. That services business, I agree, is a nice sequential rise, but you know what? They don't own a lot of that right now. It's a lot of sort of in-app game purchases. They're trying to own more of it through original TV stuff or sort of subscription services. They haven't really tapped into it yet, though.
And the next step is they need to get in the home. Yeah, they need to get in the home. That's the next step. You have your iPhone. You have the Apple TV, which is probably a little bit overpriced compared to the Fire, the Chromecast. But Apple should be the center of your home. There's no reason they shouldn't be. You have Sonos going public. Why they didn't buy them, I don't know. But that is what the next step for Apple needs to be, is the connected devices like Google has the Nest, and they should be the central hub of your home with sound, lights, everything like that, and that's going to help all the accessory revenue, services revenue as well.
Ben, I was just going to ask if Apple needs to answer, Tim Cook, Josh said was going to talk a little more about China, but with 19% growth in China and really bullish forecast, do you as a shareholder need to hear how exposed they are from a trade war perspective on the components and parts and the iPhones which are produced in China?
Yes, we do. And I bet that Tim does talk about that a little bit on the call. He's obviously been pretty soft there. But we need to hear a little bit more information on that. And that is, if there is one substantial risk with Apple moving forward, that would be it. But it seems now that, he has Donald's ear as it stands right now. And Apple's such a big juggernaut. They help China, they help US, and so we think some stuff does get worked out here, definitely.